right, thank you for staying with us. Mr. Ebitoyin Ate should be joining us now from United Capital PLC. He's a research analyst. Now, I was trying to understand how COVID and all of the other challenges has affected investment drive to our oil and gas space. Take us through that.
Okay, thank you. Sorry for the internet delay. So basically, since say 2018, even just before COVID as well, the NNPC have been trying to increase investment into the oil and gas sector, especially the upstream sector. And during COVID, we saw investments kind of bottom down to even lower than $30 million. It's been going down, and the average has been lower than since the end of 2018, the average has been down $100 million. So basically, our upstream oil and gas sector has needed some actual reforms, which is what we're seeing now in terms of negotiating those old PSC contracts of 1993. So basically, this Shell Bonga project is one of the projects that are being renegotiated now. Then in our downstream sector as well, the fact that the sector, there's no full price recovery, has affected investments into the sector because the margins are not just attractive enough for PMS generally. So even just before COVID as well, we've been seeing kind of a decline in investments in the sector, upstream and downstream. And then COVID obviously made it worse due to the fact that prices were very low. And kind of like to drill in Nigeria is not the cheapest. To say it's about average of $15. So you can imagine when prices were 20, it's actually not worth it at that point. But what we are seeing this year is that we're seeing a kind of rebound in some upstream projects.
All right, good way to start. The very new contract I'm even interested in is the OML 118. NNPC, SNEPCO, and others signed this deep water agreement. What does this really mean? A lot of money here, more than $780 million is expected in immediate revenues to government.
Okay, so the OML 188 is part of, I think there's five old contracts in the PIB. Basically, there's three terms. There's legacy terms, and there's converted terms, and there's renegotiated terms. Because these wells were in dispute in courts, so there's actually a provision for them. So basically, the NNPC have now agreed with Shell and the other parties on a way forward. Because basically, the main issue with the old production agreement was the 100% cost, which the IOCs had to incur. But in the new agreement, it should be something around 60, according to the PIB. But obviously, I've not seen this contract. But according to the PIB, it should be around 60. And it also takes a lot of bad taxes that NMC was putting on the IOC. It kind of broadens the relationship, and it also frees up funds, exactly because it's no more in dispute as it was earlier.
All right, let's move to challenges devouring investments, and one of it is reform laws like the PIB and all of that we expect to be passed into law very shortly. And another big one is deregulation. Let's talk about this.
Okay, so the PIB, yes, is going to be big for the industry. I know it's been on for 12 years, but what we saw last year was that we saw, especially in the energy space and in spaces that were highly subsidized, we saw that the FGN doesn't just have the mind as it used to be able to kind of take in the subsidies. So we saw last year, we saw a partial deregulation, and we saw service-based tariffs in the electricity space. For a while, we saw kind of a bit of deregulation in PPPRA pricing templates, although when oil prices kind of came back up again, we've seen kind of like a policy backflip. But we still believe that at this point, it's inevitable. Whether it happened this year or not is another issue in terms of downstream sector. And the PIB obviously revolutionizes the sector and kind of adds more transparency, because then there's going to be two new regulators. It's going to be a Nigerian upstream regulator and a down and midstream regulator. One is called the authority, one is called commission, and the NNPC is going to be incorporated and it's going to run privately on its own funds. There's not going to be any government intervention, and then it's going to take up JVs and it's going to take up PSCs for the government. And then also the another important factor is the fact that the petroleum minister is not going to have the same powers that he has currently. Bidding is going to go through a full transparency process, and I think that's good for the sector, because what you've been seeing is that you've been seeing Nigeria has been losing kind of upstream projects to kind of our neighbors in the region due to the fact that although our oil, we have huge reserves, it's just the cost of doing business and regulation has affected investment flows, which is what we've seen since 2018. And if you even go further back, we've really had proper deep water projects in Nigeria the last 2 decades. I mean, Total Engineer is one of them, but yeah, they've been more or less scarce.
We talk more about crude oil and even talking about the gas decade, or the decade of gas at the moment, where others are already looking away from fossil fuels and from crude and all of that. What do you think about energy transition in the Nigerian context?
Okay, so the energy transition in the context, and I think you can see a lot of firms that a lot of upstream firms, IOCs, obviously working towards some sort of energy transition, and like you can see Seplat, you can see Total, Shell. Outside Nigeria, you can see there's some sort of energy transition. But however, in the short term for Nigeria, the way we see it is that if you're looking at the emissions and how little of those emissions that obviously energy transition is something that you cannot escape. Let's just say that renewables pose a very attractive, green sector pose a very attractive for job creation and job opportunities. But we believe that in the short term, energy still has a role to play for us, and in terms of our development as well. So we're not against kind of like fossil fuels in the short term, if that's what you're asking. And I think that basically, if you look at the FGN government and FGN budget and FGN projections, kind of like petroleum tax has a big role to play in kind of funding our fiscal obligations for now.
Okay, let's wrap up on this note. A lot is still expected from the sector despite the challenges one way or the other. Let's look ahead. COVID-19 vaccines are available now, at least to a level. People are getting vaccinated, traveling started, people have started moving. Yeah, we still have virtual meetings, but what's your outlook for the sector in its totality?
Okay, so the sector in totality, in Q2 and Q3 is going to be very strong, because obviously in Q2 and Q3, so the year oil prices are around 69 today. Brent last year this time I think got to 20, even lower before it rebounded. Vaccines obviously bringing up increased demand for just moving around fossil fuels. So I think for the sector, Q2 and Q3 we're going to see very strong growth. Obviously in Q1 we saw kind of like a contraction, but that's the year-on-year effect. If you look at the quarter-on-quarter average in the past 3 quarters, you saw that it was actually very strong as well. So for the sector, 2021 is actually bright for the oil and gas sector. And in upstream, downstream in Nigeria still depends on a lot of policies and deregulation, because the companies in the downstream sector are still playing on tinier margins, and obviously the forex is an issue for them to be able to import and be able to end that wholesalers margin, which will make them more profitable. But the upstream sector, although the rigs are still not as much as Q1 last year. I think last time we checked we were about 5, and this time last year was 29. So you can see that there's that drop, and obviously investment has not come back in. But it just if this regulation should come in, or this reform should come in, then you're going to see kind of more increased investment in the sector.
It's really great to have you join us, research analyst from United Capital PLC, Mr. Bintoye Ate. Thank you very much. Despite the challenges, we're able to make it work. Thank you. I hope to see you join us very soon.
Thank you.